Welcome to the 2024 Economic Preparation and Depression channel. Thank you for joining me on this Tuesday edition, briefly November 12th, 2024. Please be sure, of course, to always hit that like button and subscribe button so you'll be notified when we put out the latest videos, interpretation videos, and I appreciate your support, ladies and gentlemen. Today, we're just going to briefly talk about this stock market that's briefly sliding downhill from these record highs that have been happening the last couple of days. Dow Jones was down 382 points, S&P 500 was down 17 points, and the Nasdaq was down 17 points respectively here as we continue to monitor Dow Jones going down after this big rally that we had in the last 2 or 3 days. Also, the crude oil is down to $67.97 per barrel now. Brent crude is down, and you may have noticed the percent sliding off some of the regular unleaded gasoline prices across the country. So that's some good news. But Dow Jones taking a break before the CPI report comes out tomorrow and Wednesday, and then of course we have the all-important jobs report that comes out with initial and continuing jobless claims that come out on Thursday. We'll have more information about that later on. But you can see stocks continuing to slide down here after the big surge that they had, post-election surge. We've been kind of on a bull run with this Dow Jones stock market for the last 12, 13, 14 years. And now things are starting to become due. Now, the U.S. economy did add 12,000 jobs in October, but that's paltry compared to the number of jobs it was adding in the summertime. And even earlier this year. But they say that CNBC is blaming it on the impact by the hurricanes, of course, and the Boeing strike. Well, that's also the case too, but you can see what happened also was that the unemployment rate they're holding at 4.1%. They said that's in line with expectations. Now, you and I know that real unemployment has really doubled that at like 8 to 10%. If we count those who have given up looking for work and have kind of started their own thing in the gig economy or some other thing. But for right now, the unemployment rate is starting to tick up officially. But they said that last month in October that it held steady at 4.1%. Now, what did not held steady was the wages. The paychecks did not held steady, and what also didn't held steady was a number of recalls. We had of food recalls, and some people have been questioning that. Costco just recalled a bunch of butter because it did not put an allergen that it contains milk on it. So a lot of different recalls are happening. A lot of things going on with our food supply too as well that we got to look out for too as well. It's affecting the bottom line for a lot of Americans here. So job creation is slowing down. That's not good news. We're not adding jobs. We're subtracting jobs from the U.S. economy here. As you can see, just the lowest number ever this year, only 12,000 jobs versus last month we had 222,000 jobs that were created. And then in August, we had 78,000 jobs created. So only 12,000 jobs created. We're starting to stagnate in that department there. And it's worldwide, folks. Unemployment, according to BBC.com, rises as pay growth slows again. This is in the UK, United Kingdom. Their unemployment rates at 4.3%. We know theirs is higher too as well, according to the Office of National Statistics, ONS. But so they're not getting wage growth. And for those people that are employed, ladies and gentlemen, we know that we haven't got a real wage increase, not a cost of living increase in the last 35 years. We have not got that. It's been about 32 years since we got our last wage raise salary increase that was above 2-3% that actually beat inflation. It's been 32, 33 years since we gotten that. Since Clinton, basically, since President Bill Clinton was in office. But that's the last time that we got a real wage increase that has outbeat inflation, that was actually affected our cost of living, our bottom line for most Americans in the low and middle class sectors. Now, unemployment is going to continue to rise worldwide. We're not in this alone. As you know, the Eurozone, the UK, the United States, all of it's facing the same challenges. They're facing high unemployment, high taxes, low growth, and high debt. That is the name of the game. And so the stock market can continue to go up 43, 45, 50,000 on most of these markets here. That's not out of the question next year. Bitcoin can continue to go up. For those of you who believe in that, it probably will go up. Gold and silver, it may, go up a little bit, steady or hold steady, according to my opinion. But the bottom line is that we're in trouble. Our economy's in trouble, and that's what most Americans want addressed next year as President Trump takes office in July 20th. Is he's got to, continue to work on the things with this economy, because that's the number one concern of most Americans, other than immigration and abortion and all of that. The economy is the number one concern for most Americans in this that are moving from state to state or working in different jobs, different sectors. And so that's going to be the next thing that's going to be handling. And this jobs report is going to be another thing too that's going to be impacting here as we head into the fourth quarter. So continue to prepare. It's not over yet, just because we've had all the election cycles, we had everything going through. We're not out of the woods yet, so to speak. We're getting this inflation problem under control. Certainly not with the jobs problem, and that's going to be the third part of the equation is how much value, how much purchasing power will we have left in the U.S. dollar at next summer. Considering how much high debt we're going to be continuing in, because these wars are not ending. These conflicts are not going to be ending anytime soon around the world. So let me know what you think about that in the comments. What do you think? Do you think that the U.S. economy has another 4 or 5 years left in it with the U.S. dollar? Or do you think we're going to go to a CBDC? Are we going to go to a new currency? Are we just gonna, before that happens? Or you think we're just going to let the dollar go hyperinflate? Or is it going to be deflation? I was in the deflation camp 2 years ago. I thought that it should have been a massive deflation, but then I realized that they let everything deflate, especially the dollar. We have a big problem on our hands because nobody will have any purchasing power to buy anyway. So unless they're gonna, go to a special drawing rights and go to a special currency that's going to be a basket of goods that the currency is, used by the SDR currency. And so that's the only way that deflation could work, if everything drops and crashes and they go to special drawing rights where everybody's on an equal basket of goods, playing fair around the world. So we'll see. Let me know what you think in the comments. Thank you for listening. God bless. I'll see you very soon.